Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is November 29, 2023. I'm going to begin with kind of a story from last week. The biggest story that kind of caught my attention in the market was Bitcoin. Bitcoin did very well last week, and a number of the cryptocurrencies did well. So I'll cover that later. But I thought I would play a piece from CNBC does a segment called Crypto World, and they kind of hit all the aspects of crypto. So it's a very brief piece, but I think it just gives a real snapshot of what went on last week in the crypto world. And that was because it was a holiday week, there was not much happening. So, but Bitcoin did well. So take a listen to this.
Today, Bitcoin and Ether rise to close out the week with Bitcoin hitting another 2023 high. And core Dow contributor Rich Rines discusses Binance's settlement with U.S. government officials and what it means for the crypto industry. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies held steady through the Thanksgiving holiday, having recovered from a big dip earlier in the week, with Bitcoin hitting a new high for 2023 on Friday. Bitcoin touched the $38,400 level for the first time since May 2022. That's according to Coinmetrics. By noon Eastern, it was higher by almost 2% at about $37,700 and ending the week higher by 4%. Meanwhile, Ether has moved back above the key psychological level of $2,000, trading more than 2% higher to end the day at just about $2,100. The second largest token by market cap outperformed the crypto market this week, ending up more than 8%. And then Solana, the big outperformer on the year, it's up more than 476% for the year compared to Bitcoin's 130%. It trailed the major tokens this week. It's hovering at about the flat line.
I'm going to begin with my dashboards. The first one is the 7 major indexes, 6 equities and 1 treasury. The 6 major equity indexes in the U.S., the NASDAQ 100, the S&P 500, the Dow Industrials, and the small cap Russell 2000 index, and the ETFs that correspond to each of those 4 indexes. And then the 2 foreign indexes, the developed markets and the emerging markets, marked by the ETF, EFA, and EEM. And then finally, the Treasury, the 20-year Treasury, ETF, TLT. So let's take a look at it. Let's look inside the yellow box. This is last week. And on the left side is listed the ETFs and the name of the index. And then the yellow box is their performance this past week. And you see that all of them are green, which means gains in all 7 of them. And even bonds eked out a little tiny gain. So that was good. It's been going the other way so long that it's nice to see something positive. When you look at the year to date in the pink box, a little bit different story. You have the NASDAQ 100, which is way dominating the list of indexes. Last year, it was at the bottom. It was way, way down, and has now begun to recover. Maybe it's fully recovered the gains that what it lost last year. And then the S&P 500 and the EFA, which is the developed markets in the world. After that, you drop down into the Dow, the emerging markets, and the small cap index. Those are all single digits. If we took out the Magnificent 7, the top 7 performers in the NASDAQ, this is how concentrated this is. I don't know the exact number, but that 46% would drop way, way down. Even though it had tech stocks in it, it would come way down. The S&P 500 would be down probably in the range of the Dow, single digits. And what was good last week and was helpful to this list of indexes was the small cap index had a very good week and contributing to their gains for the year. And then the 20-year government bond, all government bonds none of them are doing very well, but it is still down 9.8% year to date. On the far right, you see the indexes, where they are relative to their 20, 50, and 100 and 200-day moving averages. Almost all green dots. Last week we had 24. This week we have 24 out of 28, and 4 red dots. So basically a positive report for the market, both on a year-to-date basis and for last week. The equity market, not the bond market. Okay, now let's go to the sectors. This is the S&P 500 broken apart into its 11 components, 11 sectors. And you can see in the, they're listed on the left, and then in the yellow box you can see how their performance this last week. Interestingly, they are all positive for last week. It was a good week in the market. Not a booming week, but a positive week. Then you look year to date and you start to see things diverge, and you see I guess the diversity that has occurred this past year. There are 3 stories in the year-to-date numbers. One is the top 2, consumer discretionary and technology, way outperforming everything else. And then you have 4 sectors that drop way down that are positive, but are positive only in single digits. And then you have 5 sectors which are still negative year-to-date. They are real estate, energy, healthcare, telecommunications, and consumer staples. So the breadth of the market is not there. It is highly concentrated in technology, and even more so in those 7 stocks. There were, by the way, 37 green dots when compared to their 20, 50, 100, and 200-day moving averages, compared to 29 green dots last week. So again, it tells, generally speaking, a positive story for the week. Let's take a look at the S&P 500 on the chart. So we look at this and we see there have been there are 4 weeks actually. You see that move up at the end, and that's the 4 weeks that the S&P 500 has been moving up, and it's moved up sharply. So, and I show from about 11 months ago, from October of last year to present, you can see the trajectory, general direction of the S&P 500. The S&P 500 is comprised of growth stocks and value stocks. Growth stocks are, you know, Google, Apple, Microsoft, Facebook, etc. And the value stocks are more like Pfizer and Boeing and Heinz and things like that. They're not as dynamic as the technology stocks. But when it goes, this line, when it goes up, it's favoring growth, and when it goes down, it's favoring value. This last week slightly favored value, but over the last 11 months, it has gone up, which has favored growth. This is a relative strength chart showing the S&P 500 and the Russell 2000 small cap index, the ETF IWM. And you can see from March to present, so this would be about 9 months, the trajectory is amazingly up. What that does is favor large cap stocks. So small cap is still out of favor. I think at some point that will change, but it has not yet changed. The long-term treasury has been in a long-term decline. And you can see that from the trajectory of the arrow, but the line, the red and black line, tells the story. The last few weeks, it has been moving up, and you can see that from the move up at the very end on the far lower right. But I don't know that that's going to last. It would take yields, bond yields, going down and continuing to go down for an extended period of time, a long period of time, for this to go up. And personally, I don't see that happening. The dollar continues its decline. Now, this is a short-term decline over the past month or so. So I drew a little black arrow there just to show that direction, but it is a short-term direction. Other than that, it's been up and down a bunch. Gold had a good week. It went up and has been in an upward trajectory for about a year, and you can see that from the black arrow. Same thing with silver. Silver had a good week, a very good week, a better week, and it is up for the last couple of weeks. When I compare on a relative strength chart, I compare silver to gold. Silver is the numerator, gold is denominator. When I do that, if it goes up, that favors silver, and if it goes down, it favors gold. So you can see the last couple of weeks on the far right of the chart where it's going up, had a big move up last week, and then this week continues up because silver in those 2 weeks outperformed gold. But prior to that, it was in kind of a downward slide, silver relative to gold. Bitcoin, as I said at the beginning, Bitcoin had a good week, a very good week, and it has been moving up for the last not quite 2 months, maybe a month, month and a half. And as you can see from the red arrow, the longer term trajectory goes from late last year, about a year ago, to present, and you can see again, it's in an upward trajectory. We have our own Bitcoin model, which we trade. We're in the market at times and out of the market at times. This year we've been probably out of the market as much as we've been in the market. I don't know the percentage, but we've been trying to capture these up moves, and we've done that, generally speaking, and have had, I don't know the number, but we've had substantial gains in that portfolio. Volatility index has continued to decline. When volatility goes down, or the volatility index called the VIX goes down, that favors equities generally going up. And that's exactly what happened. This thing has dropped from what, almost 22 down to 12 in a couple of months. I mean, that's pretty amazing. So it shows that the volatility or the feeling of risk in the market is definitely declining. Asbury Research does 6 metrics. The last 2 weeks, all 6 were positive. This week, they were also positive, marking 3 weeks of all positive indicators in the Asbury 6. Asbury does a cross-asset relative performance and compares stocks to bonds in the top line. Stocks outperformed bonds in all 3 categories to the right the last week, the last month, the last quarter. The next one is that the U.S. outperformed the S&P 500, outperformed the emerging markets. On the bottom, fixed income bonds, corporate bonds outperformed government bonds, and high yield outperformed, corporate also outperformed the high yield bonds. This is kind of a mixed story. This is the U.S. versus the world. In Europe, mostly Europe, that has been outperforming the U.S. And you can see that in green as you look at Italy, Germany, Spain, France, and the Eurozone. All Europe, basically outperforming the U.S. However, when you look at the other countries, you can see the U.S. outperforming Peru, Malaysia, Hong Kong, Singapore, South Korea, India, China, Thailand. All of those I named, the U.S. is outperforming them in the last week, the last month, and the last quarter. Heavily oriented to Asia and the Pacific. The next is gold and silver. The spot price of gold is up to $2,019, continues to go up. That's an increase of 1.7%. Silver up to 24.35. That's a 4.5% increase. So big increases in silver for the last couple of weeks, and definitely increases in gold for the last couple of weeks. The gold-silver ratio has dropped down to 81-1, still highly favoring silver as a better value for potential gains. The monster box of silver, 500 generic bullion rounds, is going for $13,525. This is $27.05 per round, including the markup, which is $2.29. When you bring it down to a tube of 20, it goes up about 50 cents per round on average to $27.55. And the source of this is my son, Preston. Okay, I tell the market what to do all the time. It just never listens. Well said. We can have hopes and dreams and wishes, but the market does what it wants to do. Thank you for watching. If you have questions or comments, leave them in the comment section below.